All right, half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne Man with Annabelle Jewelers.
Our top story is cautious trading in Asia as investors assess the latest trade headlines. President Trump just confirming a 50% copper tariff from August, as well as a 20% rate for the Philippines and 50% for Brazil.
Japanese bonds in focus today ahead of a pivotal 20-year auction set to put the spotlight back on longer-term debt.
Plus, we speak exclusively with Geek Plus about their trading debut in Hong Kong, expansion plans, and AI robotics innovations. Well, let's take a look at the market action so far this morning. I think if there's really a key theme that's coming out of it so far is that the sentiment is sort of changing. We came into the session today and really the focus for us was on sort of how traders were looking past all of the trade headlines. That kind of seems to have changed that calculus just in the last few minutes because we had President Trump saying that the copper tariff that he had announced at 50% duties on US imports was going to be effective from August 1. So taking a look at the market reaction to that, you've got LME copper just coming online this morning, a little bit high, but mainly watching that COMEX contract there. You can see in the bottom right a jump there of around 3%. Again, it does really put that question. Are we going to see the same sort of demand in the US moving forward? What does that mean for global copper supplies as well? And how much of a premium do we continue to see, again, for that COMEX contract? So that is the state of play as we come into the session this morning. We are just seeing volumes that are pretty thin across the board, so it tells you investors still in their wait-and-see mode, and you're seeing US futures a little bit under pressure so far today. Overnight, though, that focus was very much on what was happening in the tech space. And let's actually take a look at the NVIDIA supplies in the session so far today. Given we had NVIDIA rallying overnight, becoming the first $4 trillion company ever. I mean, just let that maybe just sink in a little bit, the size of NVIDIA and how it's managing to look past all of the geopolitical concerns, the relationship between the US and China as well, and the tariff headlines. But you are just seeing some of these supplies moving high so far today. And again, looking at that session for the open in China this morning, a little bit under pressure so far. And I think one of the trends that we're seeing that's continuing to be discussed and a bit of pushback as well we saw in local media yesterday afternoon is on those price wars, those delivery price wars. What are the discounts that are on offer from Meituan, from JD, from Alibaba as they try to compete? It's that sort of broader involution trend, and we've got government officials again through local media saying there are no real winners when you have this sort of thing.
And where does it go, right? When you talk about what's been going on with JD just announcing that new program, and that's what kickstarted all this. I think the China Today column talked about you get free boba if you buy like up to a few items on Alibaba. And that really goes to show how fierce this competition is right now in the food delivery space. And it really has weighed on the likes of Alibaba and Meituan. They are one of the worst stocks in the HS Tech here this year. Let's get to our top story now, though. President Trump saying the U.S. will begin levying a 50% tariff on copper imports from August 1st. And that's after he unveiled a new round of new tariff rates on countries like Brazil to the Philippines. Let's get to our editor, Jill Deeses, with more on just keep us up to speed today. What's going on?
Okay, well, I guess we'll start with copper since that's the latest line here. Obviously, Trump's been telegraphing for several months now that a levy on copper would likely be coming into effect, that 50% higher than I think what was previously anticipated, but that is the number that he's been floating recently. All that being said, I do feel like a broken record on this program sometimes because I have to point out that I still have a lot of questions about the specific tariff, how it's going to go into effect, what exactly that means for copper that's on the water right now, because as we know, global traders have been racing to ship shipments into the U.S., sending them to Hawaii, to Puerto Rico, trying to get everything handled before this tariff goes into effect. That August 1 deadline is what Trump says. Oh, I should also point out, we don't even know what types of copper are affected ultimately, so lots of questions there. But that August 1st deadline, I mean, in the past with some of the other metals that Trump has targeted with his duties, we've seen exemptions for shipments that were already in transit. This time around, I don't think we know yet exactly what's happening. So I do think that that's probably going to cause a lot of uncertainty today, just as we kind of sift through what exactly Trump means like this. Again, very classic Trump. You get an announcement like this, and then you kind of race to figure out exactly what's what's in the details here. But yeah, I think that one is certainly one that we're looking out for. Obviously, the Brazil tariffs that have been announced, another big one. I would point out that Brazil was not on that initial list of Liberation Day tariffs back in April, likely because Brazil is the only country that, among this list that actually runs a deficit with the United States. It's a small one relative, but, it's still a deficit. But this does seem to come from a place, at least for Trump, where, it feels a bit personal. He really is kind of singling out Brazil and specifically former leader Bolsonaro, that far-right populist leader that I think that right now is, on trial for an alleged coup attempt. That's something that Trump's really been targeting with this tariff. So it seems a little bit divorced from some of the economic reasons. But I'd also point out that Trump has also been going after BRICS countries in recent days. Lula from Brazil was one of the only BRICS leaders, along with the leader of South Africa, who actually was kind of hammering Trump over various issues. So I'm not sure how much of that's kind of the reason why Brazil has drawn Trump's ire now. But there you go. That's now we've got this the tariff that could be going into effect on Brazil.
Yeah, I find it really interesting, the letters that were sent out, because we had in that graphic there the 8 different countries that got these letters, and you look at sort of like how important is this trading relationship to the US, and you can see here, well, there's Brazil, of course, but they're looking a little bit different. But out of the others, it's only the Philippines that makes it into the top 50. So why these countries, and again, who's next?
I mean, I think, Belle, you could ask that same question when we had that big giant board that Trump had back in April, when you had tariffs that were announced against pretty much every conceivable trading partner, even if it was incredibly small. I think, yes, to your point, of those remaining countries, that imports from those nations amounted to less than $15 billion last year, if you take out the Philippines, if you take out Brazil. So, yes, I mean, really, really small ball countries here. I mean, I'm not sure how much of this is, Trump trying to get out, just sort of finalizing a bunch of stuff for countries that he had already announced back in April. He's trying to get ahead of, whatever self-imposed deadlines he may have. Now this August 1st deadline that he's talking about. But it does kind of show you that, some of this stuff still kind of, for as much as Trump talks about how, there's all this logic that's going into these decisions and what he's thinking about with the calculus for these tariffs, some of this is really just, again, still quite confusing. You're seeing a chart there of the U.S.'s biggest trading partners where, you would actually think, in some of these cases, we still don't have letters on, some of these more critical trading partners, or we still have a lot of questions about those more critical trading partners. So the whole thing, the way that it's been that it's been rolled out, obviously does leave a lot of uncertainty, does leave a lot of questions. And I think still, even when you go back to earlier this week, Trump saying this deadline isn't 100% firm, seems to be changing his mind again. Still a lot of open questions in the next few weeks.
Yeah, it certainly is. Jill Jesus there, our editor, trying to bring it all up to speed here. And it's interesting, right? You take a look at what central banks have done this week. The likes of RBA, RBNZ, even the Bank of Korea just now, they still seem to be sitting on the sidelines to see what these tariff impacts are going to have on inflation. You certainly see that in the Fed minutes overnight as well, right? And you're starting to see a lot of a growing divide among Fed officials about whether this is going to be a one-time increase when it comes to inflation or something that is more sustainable. And certainly that's the reason why we're seeing the market still quite debatable about whether we're going to see those 2 rate cuts that have been priced in so far this year. But then again, look, markets have shrugged it all off, right? When I'm talking about, NVIDIA being a $4 trillion market cap, and you talk about Bitcoin at 112,000, we've moved past all those sort of concerns, it seems, at this point.
It does seem like we've moved past it maybe this morning or maybe within these hours, but this is a market that's very headline sensitive as well. And I think it's interesting what you said about the Fed minutes. It's that question of what does it mean for longer term expectations? Are those going to stay anchored? Yeah. If they are unanchored, how much more challenging is that for the Fed moving forward? And you saw as well that lack of consensus around how many cuts this year. Is it going to be 2? Is it going to be 1? Is it going to be none? That was very much a possibility as well. But you mentioned about the tech story, and that was a big one in the session overnight. That big milestone for NVIDIA, the first ever $4 trillion company. But let's bring in Nadia Grant now, head of global equity at BNP Paribas Asset Management. And Nadia, we can get to you on tech, the theme broadly, because you've got the US as a major holding for you. That's your major market that you're looking at. You're looking at a lot of these big tech names in particular, also from Taiwan, TSMC, for instance. Do you see any concerns, or do you speak with anyone, any concerns about the strength of this rally around AI optimism and whether it could be tested by those geopolitical headlines?
And basically what we've learned is when we started the year, we had peak enthusiasm around the AI theme. That was the only basically theme that had propelled the market the past few years, from not just a price appreciation standpoint, but also from an earnings standpoint, was really the main driver of S&P 500 earnings. And so DeepSeek was a big shock, and we've seen the US side of the AI complex really correcting quite sharply on the back of that. And it was obviously potentially great news if we think that we'll have cheaper model, then we can bring demand forward, then we can have more consumption, as the Jevons paradox states. And so there was a lot of questioning. Obviously, there was overcrowding, but a lot of questioning on will this company, all of these big investments, are they going to be still necessary? And will these big investments that the hyperscalers have done towards AI, will they erode the return on investment that these companies have historically generated? And will they erode the free cash flow margins that they generate? Because that's really what's stands them apart from the rest of the market. And what we've learned subsequently, so we've seen actually on the US side, particularly those names really lagging for the better part of the beginning of the year. You also had the momentum unwind that added to that pressure. And what we've learned is that we've had two earnings seasons. So you had the fourth quarter and the first quarter. And what you've learned is actually that they've been able to accelerate their top line. So those investments in AI are actually starting to bear fruit. They're also saying that they're going to be disciplined in terms of managing their cost line. And so we're thinking that actually the returns and the free cash flow generation is not going to be damaged. And what they've said, very importantly, is that they'll continue to invest heavily. And so CapEx is up again. And you have these hundreds of billions of CapEx that are being deployed, which is very positive for the chips and for the likes of NVIDIA. And from a geopolitical standpoint, where you've had a lot of obviously uncertainty on earnings because of tariff, what you've seen is that the tech complex has been pretty insulated from that, and it's been the only cohorts of stock that have seen earnings upgrade at the beginning of the year when everything else was being sort of downgrading on the back of that uncertainty. So I absolutely continue to believe in that theme. It's a multi-year theme, and we're seeing the CapEx, and we're seeing, well, the like of the semis company being able to shrug off some of the political uncertainty from having obviously a ban on exports on China, but having such high demand for their new product elsewhere that they're able to offset the bulk of that. So a pretty constructive outlook still.
So keep calm, carry on. I mean, how should I look at U.S. stocks in particular, beyond just the mega cap tech? I mean, how could I look at U.S. overall as a market now?
So when we look at the U.S. overall, we think you obviously have that self-inflicted slowdown because the impact of the tariff is going to be felt. We're really keen to listen to companies for their Q3 results, because we'll start to see what the actual impact is to them from an inflation standpoint, from an earnings standpoint. And so we think that actually the US, when it has been so exceptional at having higher growth versus the rest of the world, perhaps this year, because of the impact of tariff, will close that gap. And so that happens at the same time as other markets are having positive catalysts. And I'm thinking about the infrastructure plan in Europe, or Rhee in Europe. And so a big catalyst to boost growth, to have a fiscally loose policy, and at the same time as having a loose monetary policy. So we think that there are other areas that are starting to look very attractive in that context of slowing US growth, and likewise finding a lot of opportunities here in Asia.
Well, that's what we want to talk to you about, because I think there was sort of a sentence that stood out to both Yvonne and I in your notes, and it was sharpening your pencils on China. What do you mean by that?
So we already are very positive on China tech. Because of China closing the race on AI, and so that's positioning that we already had, but really intrigued by other things as well. So we really like the sort of secular growth in financial services in China. So we also have exposure to insurance company, as there's a lot of greenfield there, a lot of organic growth opportunities to serve a population that do not have as much in terms of saving plans and life insurance. So we really have a great confidence there that the market is going to continue to be booming. But where we're sharpening the pencil is we're really keen to understand better what supply side reform could mean and what is actually going to happen. So these anti-involution measures, because where we had fears or where we were less positive or less constructive was really on the sort of the battery side, the EV side, or on the on sector, on the solar, where you've had, obviously, as you mentioned earlier on, a lot of oversupplies, fierce competition, and that's very much margin eroding, return on equity eroding. And so if you start really instilling a degree of price discipline, of supply discipline, this would be really positive for the market and for the margins and returns of the companies in those sectors.
Nadia, thanks so much for joining us, and come back when you're next in Hong Kong. That was Nadia Grant there, Head of Global Equity at BNP Paribas Asset Management. And we're counting down, of course, the open of trade in Shanghai, Shenzhen, Hong Kong. Just got the Yuan reference rate coming out, 7.1510 per US dollar. The estimate had been for 7.1794. So really big difference there again to what had been sort of indicated earlier. But you're watching the China show. Futures looking for a weaker start. This is Bloomberg. Recapping the Yuan fix, we just got that in the last couple of minutes. So the reference rate is coming at 7.1510. The estimate had been for 7.1794. Still pretty much in line with where we've seen the PBOC setting in recent days, but certainly a big gap there again to the estimate.
Yeah, but still pretty steady overall when it comes to the currency, despite all these tariff headlines as well. Let's get to our next interview. The CEO of private equity firm Warburg Pincus thinks Vietnam's deal for a 20% tariff rate in the U.S. still leaves it in a competitive position. Jeffrey Perlman told us exclusively that other Southeast Asian nations will probably end up facing similar levies.
I think Vietnam got out in front of obviously a very complicated environment. And I think being proactive, I think, was a positive. I think landing, we'll see where it lands for everyone else. But I think getting to that 20% threshold makes it very competitive for Vietnam going forward. I think most countries probably, I mean, we saw the most recent announcement. My sense is some of those end up coming down as they get negotiated. So I think 20% ends up very competitive. We know the bottom line is going to be at least something more than 10%. So as long as you're kind of sitting in that 15 to 20%, I think it's very competitive. And so I think Vietnam, as we sit today, and obviously things can change, but it feels well positioned given the overall environment.
There are countries like Thailand, for instance, which may just see lower tariffs in Vietnam. Would Vietnam lose its competitiveness as a result of that, or other factors that make Vietnam really attractive to investors like yourself?
You know, it's a great question. I think because a lot of the products that are made in Southeast Asia and in Vietnam as well I think the U.S. administration has been fairly clear that they're probably ones that are not going to be made in the U.S. And so my own view is I think the tariff rates will probably be pretty close, sitting on top of each other across a number of those markets. And the reason being is if you have one country that's at 40%, others are at 20%, it's just going to shift the trade deficit from one country to another. And so I think the U.S. administration understands that. And so my sense is, again, it's going to end up, I think, for ASEAN countries, is my sense, they're going to be pretty, close together on that front. But I think what Vietnam has created is a tremendous ecosystem of the Queen Bees and other of the key manufacturing kind of power centers. And that's very valuable. You saw them produce through COVID. That really established, I think, their reputation even more as a high quality producer. And I think that positions them well, even if other markets ended up at 15% and they're 20%. I still think that's very competitive going forward. As we think about Asia, what I like about Asia is obviously in a world of higher rates, you need growth. Asia is going to represent 2/3 of global growth over the next decade. So I think from that perspective, it's very well positioned. We've been in the region for 30 years. We just celebrated our 30th anniversary last year. In fact, next year will be our 30th anniversary in India. So we've been in these markets a long time. And I think when you think about especially playing the emerging consumer, whether, again, it's It's in housing and retail, areas like private education, healthcare, and especially financial services. Financial services, if you looked at the last 30 years that we've been in India, there has not been a single moment in time in those 30 years that we weren't invested in financial services. From sponsoring the two largest private sector banks, HDFC and Kotak, through our most recent investment back into IDFC First, which we made after Liberation Day. Financial services is really poised for, we think, a lot of growth going forward.
You talked about India. How about other markets like Japan, which seems to be quite attractive to a lot of investors?
Yeah, look, Japan is certainly, when I think about investors and their diversification, certainly the U.S. has been a huge market for them. Sprinkle a little bit of India, and certainly now increasingly they want more exposure to Japan. Look, we've seen major structural reforms, obviously in terms of pushing more efficiency within corporates across Japan. We think that is transformational from a private equity perspective. It's going to set up more opportunities for groups like ourselves. We've been active in Japan over the years in real estate, whether it's logistics, data centers, life sciences and R&D assets. But from a private equity perspective, I think where we're uniquely positioned as growth investors is there are some great brands in Japan that need help to grow outside of Japan. And so that's one of the great elements of, I think, for Warburg Pincus being a global partnership, is we can help to take those companies overseas and really leverage our footprint around the world.
That was the Warburg Pincus CEO Jeffrey Perlman speaking to Bloomberg's Haslinda Amin at the Techcombank Investment Summit in Hanoi. And we are just over 5 minutes away now from the open of trade this morning in mainland China and Hong Kong. Futures are pointing toward a little bit of weakness here. It's that big continuing focus on these tariff headlines. We just got President Trump announcing 50% duties on copper imports to take effect August 1. More letters have been sent out. There's concerns around the involution trend in China, but still CATL is one that's been really rising in Hong Kong. We've actually seen a 46% gain following its May debut, and shares now at a complete premium.
Yeah, a premium over the A shares. There's about a 30% premium, which is quite rare to see for an 8-share stock as well. But yeah, JP Morgan saying, look, maybe prepare for some sort of pullback now in Hong Kong after this massive rally we've seen. Plenty more ahead. This is Bloomberg. Some stocks to watch here at the moment. We're focusing very much on the HS tech space here this morning, just given NVIDIA surge, of course, to that $4 trillion briefly market cap. So we're not seeing actually that follow through in some of these tech shares here this morning. In fact, Alibaba, you watch the food delivery space, right? That's just getting hotter and hotter. You're seeing HSBC slashing that price target by 15% on that sort of competition and the amount of investment that they're putting into this sort of price war here as well. And of course, pre-market looking like this. Hang Seng slightly to the downside. The open is next.
You're watching the China show, and I can hear the rumblings of thunder outside the studio this morning. We do have a thunderstorm warning that's just taken part. Amber rain warning. If you're watching us, I'm glad that you're at least inside, hopefully, and not outdoors, because it looks very, very grisly out there. Shanghai as well, you can see the excessive heat warning. So that is the weather update. But let's also, Yvonne, let's talk about the market action today, because I think we're also coming into this with lots of questions around these Trump tariffs, who got the letters, the copper deadline that we've got now as well. I mean, there's really a lot to be considering today. And
I'm still trying to look at that beauty cam in Hong Kong. You can't see anything out there right now. So yes, brace yourselves, guys, today. But yes, when it comes to the volatility that you're seeing in these markets, there's not, I mean, it's kind of a lack thereof, right? When you take a look at what we've been seeing in these markets, when you have the likes of NVIDIA, reaching $4 trillion in market cap overnight, U.S. stocks were near records, and Bitcoin's at 112,000, right? I mean, what's there to worry about? And most of the narrative seems to be, forget the tariffs. Let's just focus on earnings moving forward here as well. So that seems to be the sort of narrative that we're seeing here today. Onshore markets are looking pretty decent here at the get-go. Shanghai's up about 0.1%. We barely made that sort of milestone yesterday, but we're close to the 2025 highs for the CSI 300 as well. Copper prices, as we've been talking about, right? So we are are seeing at least the COMEX futures in the U.S. perk up a little bit on the prospect of what Trump has said, that these copper tariffs of 50% are going to go into effect in August 1st. So LME contracts heading lower. So is the Shanghai one here this morning. We're down about 0.8%. So copper stocks very much in focus here today. But we're watching likes of iron ore, Shanghai crude still looking pretty well. CATL, though, that's the big one to watch. We're not even sure what's really driving this sort of massive rally, but we talk about this sort of record premium that we're seeing over the H shares, over the A shares. It just goes to show the demand picture for this stock is still very much red hot here. We're seeing 1% gain on the A share right now, but it's a 30% premium in the H shares over the A. That certainly is something that's interesting. JP Morgan say, look, there might be some ripeness for a pullback when it comes to the H shares here, something to watch as well. Flip the boards. We're watching also what goes on in Hong Kong. Tech, very much in focus here, given what we saw in NVIDIA overnight. We're not seeing that follow through, though, in this whole HS tech space. We're actually down about 0.4%. Hang Seng is down about 0.1% here right now. It really comes down to what we're seeing. And it seems like a lot of the concerns around food delivery are really kind of leading the likes of Alibaba, Meituan, and JD lower. There you go. JD is down 2.5%. They announced just yesterday this new sort of merchant program that might actually spice up furthermore this whole food war and price wars that we're seeing in the food delivery space as well. So that certainly seems to be a point of contention when it comes to the tech space here this morning. We're watching also property side of things. HIBOR, we actually are starting to see it perk up a little bit. We're back to levels in 1-month HIBOR since May after 3 intervention attempts from HKMA. But we're not seeing that much move in honky dollar of late. You take a look at what it seems to be the crypto stocks here as well. So we talk about where Bitcoin is right now. We're briefly off the 112,000 level there when it comes to Bitcoin in the Asia session. But certainly there seems to be a lot of optimism in some of these Bitcoin stocks or crypto stocks as well. Boya is up some 6%, and copper stocks as well perhaps might be following what we're seeing in the copper price here this morning. And certainly there's a lot of focus on these traders really rushing to stockpile or the like before that August 1st deadline. But you're seeing mostly lower in some of these miners here today, Belle.
Yeah, that's right. We were just talking with Jill earlier about how traders are trying to rush to get their deliveries to places like Hawaii or Puerto Rico just to try and cut their shipment times. But I think there's really two different interesting trends today. Yes, you've got the tariffs and you've also got that involution trend as well to watch in China and the market implications we're seeing from that. But let's get to the economic side and bring in Johanna Chua. She's head of emerging market economics at Citigroup Global Markets. And Johanna, I mean, how do you wrap your head around what's going on? It's just every morning we've got new letters that are being sent out, new deadlines that are in place. What's top of mind for you?
Well, obviously, it's a good reminder to us that just when people thought maybe we're past the peak tariff, these things can keep coming up again. So obviously, we're watching very closely a lot of the developments. I think the Vietnam framework agreement that came out earlier, I think was kind of revealing in terms of sense that, 20% is kind of the benchmark for those, especially among Southeast Asian economies in which they compare themselves. And the fact that you have a 40% kind of transshipment, which we see is really being targeted in terms of China's supply chain rerouting, that obviously kind of sets a floor on what I think we were expecting from an effective tariff rate on China. We still need to know what exactly is the definition of transshipment. Is there going to be a minimum value-added content from China? So that's a question mark. And then obviously we got the letters. We got 14 letters on Tuesday, or overnight on Tuesday, and then we got another round of 8 letters. And I think Asia obviously still features very heavily in the letters. We've got obviously Japan, Korea, and then we've got all the ASEAN economies. And then just when you thought, oh, did they forget Philippines? We had Philippines added on, and even Brunei. So let's just close the loophole on ASEAN, putting these reciprocal tariffs for August 1st. But it's really interesting to see the economies that are not on the list, which then raises a question. Of course, there's two swings. Either if you're a very large trading partner and you're not in the list, maybe you're up for a framework agreement that's going to come up relatively soon. And obviously, people are looking at EU, for example, or Switzerland. But closer to home, obviously we've got India and Taiwan that are major trading partners that could be up for a framework agreement. And then you look at the others, maybe either part of another bucket, which are small trading partners. What Scott Besant had mentioned about 100 letters where we don't do a lot much trade, and maybe you get a baseline tariff of kind of 10%. So you hope certain economies, like on Tuesday we were hoping maybe Sri Lanka would get there, but it looks like Sri Lanka got a letter overnight with 30%, but Pakistan didn't get a letter. So then the question is, maybe they get to the 100 bucket. So again, we don't know, because we don't know if there's going to be more letters to come, but I think there's a bit of a sigh of relief for those that haven't gotten letters.
the fact that you're seeing some tariff rates are higher, like Japan, marginally speaking, but some mostly are unchanged, some are lower. It just goes to show how fluid the situation is. But what does it tell you about the motive behind these tariffs?
Well, a lot of it, I think, is just a bit of a bucketing, right? So, I mean, if you have too many new ones tariff in particular, it may be harder to enforce. So it seems like he kind of rounded off. Like, you know, Japan is not alone. Same with Malaysia. So Japan, Malaysia originally had 24. They ended up at 25. Korea was 25. So you kind of round it off to a certain extent. And then again, maybe there's a little bit of a bucketing here and there. Unfortunately, for some, you get rounded up. Like Philippines went from 17 to 20. Yeah. And some you get rounded down, right?
Who gets hit the most? Who's the most vulnerable in Asia, you think, right now?
Well, right now, I think people are watching very closely, obviously, some of the ASEAN economies. Yeah. So, for example, among the trade-exposed economy to U.S. that have relatively high tariff, for example, Thailand. I mean, Thailand is a pretty open economy. You're still at the 36%. You're going to have to see how you're going to be able to ratchet that down to, like, obviously closer to the Vietnam tariff. So that's something we need to watch out for. So I think, and obviously we've got others, you know, kind of smaller economies. I mean, Cambodia is there, and then, you know, the Laos stuff, right?
Yeah. What about sectorial tariffs, and how do those evolve as well?
Right. So obviously we had the news on the copper tariffs. So copper tariffs, again, is not as big of an issue for Asia. That's really more like Chile or Peru. And then we will see what happens. But obviously for Asia, what really is relevant is semiconductor tariffs. And semiconductor obviously matters for Malaysia and Taiwan relative to the size of their economy. And then we're also looking for pharmaceutical. And pharmaceutical at the margin within Asia obviously matters a little bit more for Singapore and to a lesser extent India. Although I think, you know, we're still, you know, hoping that there will be carve-outs for that. And then, of course, the big debate on sectoral tariffs is to what extent the negotiation that Japan and Korea will have, are they going to be able to get as kind of a similar deal to what UK got on autos or not? And I think the bar is a bit high for that. I think it's going to be quite difficult and challenging.
There's a lot of debate about whether these, you know, nations' currencies are being part of these trade negotiations, but how does that frame your sort of outlook when it comes to the dollar and Asia FX overall?
Look, I think obviously maybe they won't really make it explicit, but it's hard to imagine when Trump did put out his America First kind of executive order back in February, there was a mention of the currency. Now, I don't know to what extent that really is part of the negotiation, but it could be part of the negotiation. And, you know, obviously that's something that is relevant for economies that are on the currency monitoring list, which is particularly relevant in Asia, like for Taiwan or Korea. So that is something we're watching. Obviously, also Japan. It's obviously something that we're also watching very closely.
I want to get to you about inflation expectations, and actually we just had some BOK lines coming out, and they're expecting CPI to remain around 2% on low demand, oil price stability, and largely their 2025 outlook is in line with expectations. But I think more broadly as well, in the Fed meeting minutes overnight, there was that clear read-through that came across that Fed officials were just like, we don't know what to do right now, and we don't know what it means for inflation expectations moving forward.
No, absolutely. And obviously the impact on inflation in the U.S. is very different from the impact on inflation for the rest of the world, where in U.S. it's more cost-push inflation, like a supply-side shock. And then the debate is, you know, how large is that? Is it a one-off? Is it sustained inflation? And then obviously for the rest of Asia, it's the opposite. You know, how much of this is a demand shock that is disinflationary, and is it meaningful enough to move the needle for central bank policy? And I have to say, I mean, look, you know, we just had Bank Negara cut rates 25 basis points. I would say at the margin, with the kind of revival of the trade policy uncertainty, you know, at the margin, it may err on towards a more accommodative policy stance. This is something we need to watch out for. Korea is a little bit more complicated because there are other dynamics that have happened, including what's happening to housing prices, and needing to see kind of the latest round of macroprudential policies before BOK cuts. But, you know, just give you an example, after that tariff letters came out on Tuesday, the first round of tariff letters, we actually put out a note on Indonesia because, again, we're actually thinking because of this negative headwind on sentiment, it probably reaffirmed our view that, you know, although BI paused in June because of the Middle East noise and the concerns about external shock in oil, we probably think BI will resume and cut again in July.
I'm thinking longer term, though. How, you know, given how high these tariff rates seem to be still, is it sustainable in the longer term? And what does it mean for global growth moving forward?
I mean, a lot of this is obviously depending on what Trump really is what's the willingness of Trump, and, you know, obviously what's the pressure point.
Is it just bargaining?
I mean, obviously, some of this is clearly in the hope that it's bargaining, and we're waiting for that on August 1st. But the question is, I think because you had the Vietnam deal at 20, and then you had the UK, which runs a trade deficit with the US at 10, then the question is, where are we in the range of bargaining? How much room do we have?
Yeah.
And I think for some of the other economies, like the Southeast Asian, it's not if you're running a surplus with the US, you may not really get to 10. I mean, maybe the best you can get is maybe, hopefully better than the Vietnam deal. And that's the debate.
Yeah.
I think we both want to ask about the same thing, Yvonne and I, but involution, it's really, we've seen it being an issue in China for a long time, but certainly we're getting a lot more warnings on this right now, and you're seeing it reflected in JD's price, for instance. Today the stock's down 2.5%. I mean, there's a lot of concern here about that race to the bottom. What do we see in terms of reforms from China moving forward, do you think?
I mean, these are obviously, this is a challenge even for the rest of the region and competing manufacturing exporters. Look, obviously we're waiting for some signs on supply side. I mean, there's a lot of talk about supply side reform. What exactly does this mean? Are we going to talk more about, things related to like steel or cement or kind of traditional commodities? Are we going to go further down the supply chain? But then, it's a bit of a balancing act, right? Because at the same time, any kind of supply side cut does have a growth impact. Yeah. And then you do also want to allow private sector, how much intervention will you do in terms of the operation of the private sector? So this is something to watch. Obviously, it would be good to put a floor on some of the deflationary pressures. Yeah. And that also has a lot of spillovers for the rest of, it's positive and negative. It adds to kind of the disinflationary pressures. But it also puts a lot of pressure on competing manufacturing exporters.
Johanna, it's always good to have you. Johanna Chua there, head of emerging market economics at Citigroup Global Markets. And still ahead on the China show, we got a big interview to tell you about. Yeah, they're one of the 6 gongs that were hit yesterday here. Geek Plus, we're talking to the VP of International Business here about this listing, their expansion plans, of course, following that successful trading debut here in the city. That exclusive interview coming up in the next hour.
And we have another weather alert for you because we mentioned coming into this block about how we had yellow rain. That has been upgraded to red rain warning. And look, I don't know if we need to show this camera
angle. It's not
amber
anymore, guys.
We're really proving that it's raining right now. It's a red raining that we've got. But we'll have plenty more ahead. This is Bloomberg.
Well, Malaysia's Prime Minister Anwar Ibrahim will make an appeal for lower tariffs when he meets with U.S. Secretary of State Marco Rubio today in Kuala Lumpur. Of course, we're tracking this ASEAN summit, and our very own Min Min Lo joins us there from the meeting venue. And Min Min, I understand there is a meeting underway this hour. Tell us a bit more what's going on right now.
Yes, we just saw Wang Yi heading into the meeting room with ASEAN foreign ministers about 40 minutes ago. I did ask him if he's going to be meeting with Marco Rubio today, but he didn't answer the question. But as you said, that meeting underway, and the Malaysian foreign minister gave the opening remarks, and he made a nod to geopolitical tensions and the security issues in the South China Sea, urging all parties, including China and ASEAN countries, to come up with a code of conduct in the South China Sea. Now, this is something the countries have been working towards for a long time, but have been seeing very little progress. The Malaysian foreign minister also mentioned the threats to a free and open economy, and to that end, ASEAN and China will be looking to sign an upgraded free trade agreement later in the year. Of course, Marco Rubio, we also saw him entering the convention center not too long ago. He has a packed schedule. He is going to be meeting with the foreign ministers of Japan, the Philippines, as well as Russia. That meeting with Sergei Lavrov potentially going to be very important because it comes as Russia has been pounding Ukrainian cities with a record number of drones and missiles. President Trump has expressed his displeasure. He said he will be looking seriously at a bill introduced by the Senate to sanction Russia as well as countries that buy Russian LNG, oil and petroleum products. Of course, who's the biggest buyer? China is one major buyer, so this could potentially impact U.S.-China relations. Notably missing from Marco Rubio's itinerary now is a meeting with Foreign Minister Wang Yi, but I wouldn't rule it out because things could still change along the way, so we'll see whether or not the two men take this opportunity to meet face to face to discuss potentially that trip by President Trump to China at some point later this year. We know the U.S. administration has already been gauging interest from businessmen about potentially accompanying President Trump on that trip. We also know Scott Bessent has said he intends to meet with his Chinese counterparts in the coming weeks to kick off a larger round of trade discussion. Again, the two men had the chance to meet at the sidelines of the UN Security Council meeting in February, but they didn't take that opportunity. Will they actually meet this time? It will tell us a lot more about the state of U.S.-China relations now.
That was our China correspondent, Min Min Lo, there in Kuala Lumpur, and we'll be back with you in the next hour as well. Getting now to the reaction from Bloomberg Economics as well to all of the tariff headlines. And the economists there think that China's exports will remain at a significant disadvantage in the US market, even if higher tariffs on rival trading partners kick in on August 1st as scheduled. Our China-Asia economist Chua is with us. So talk to us about the sort of second-order implications, because it's not just tariffs that are going to be levied on China's major trading partners. It's also how that feeds in to the mainland economy.
Yeah. So China this round is also affected indirectly, even if China's deadline for tariff pause for higher tariffs is not up for review. If, as planned or as notified by those countries, the reciprocal tariffs were to go up on August the 1st, the difference between China's tariff hits with the rest of the world would be narrower. That at the margin would increase or rather shows a narrower competitive kind of disadvantage for China, but it's not very clear, A, whether those higher tariffs will go ahead, and if that tariff orientation will go ahead, how long it would last. So if we take the example of Japan and Korea, they were notified 25% tariff, reciprocal tariffs rising from the current 10%. And based on our calculation, if you remove exemptions, etc., the hike for those two countries this year will be around 20% or so, slightly higher, but China's is 30%. So still, even for this year's shock, is something like over 5%, easily over 5% higher for China. So that means China is at a disadvantage still.
So at a disadvantage, we're still getting close, I guess, to this 90-day truce with the U.S. August 12th, which is days after this August 1st sort of implementation with everybody else. How does this all play out, do you think? What's the base case now?
Yeah, absolutely. Lots of uncertainties. Our base case maybe over the longer term at the end of some sort of indefinite horizon or some sort of violent horizon further down the road, we could see potentially China could face tariffs similar to what it is now. The composition could be different, but maybe China will face around 40% tariffs in the U.S. And it could be somehow the reciprocal tariffs could be slightly higher, but fentanyl-related tariffs could be lower. But there could be bumps along the road. It could be, after this 90-day truce, the tariff could go back up a bit more. So lots of uncertainties. Our baseline is more or less similar to now, sort of over a rather sort of in terms of end game potentially.
Chang-Shu, thank you. Our Bloomberg Economics chief Asia economist there. In some other headlines around the world this morning, NVIDIA CEO Jensen Huang is reportedly expected to meet with top Chinese leaders in Beijing next week. According to the Financial Times, that could happen when he attends the International Supply Chain Expo starting on Wednesday. The report says Huang is seeking talks with China's Premier Li Qiang and could also meet with the Vice Premier He Fung. Taiwan is holding its biggest annual military drills ever as President Lai Ching-te's emphasizes readiness against a potential Chinese attack. The 10-day exercises are double the usual length and will call up a record 20,000 reservists. Even civilians are getting involved, with local governments testing essential services and a supermarket chain using basements for air raid shelters. A South Korean court has approved the new arrest of former President Yoon Suk-yeol on charges tied to his declaration last year of martial law. The court accepted a special prosecutor's claim that Yoon poses a risk of destroying evidence. Yoon appeared in court Wednesday for a hearing reviewing the request. He was then taken to a detention center to await the ruling. Plenty more ahead. This is Bloomberg. All right, checking movers here this morning. We're facing some of the liquor stocks here right now. We've been talking a little bit more about Goldman Sachs cutting the likes of Gujing to sell, Luzhou to neutral. There's been some austerity policies in that space as well. So Anhui is down about 1.3% here this morning. Sunny Optical getting an upgrade from Morgan Stanley. So they're upgrading the stock to overweight. That stock now rises to a 2-month high. So they're talking about the electronic components makers overall expectations of a new growth cycle driven by new product launches in its smartphone and new business decisions there. So the Apple supplier getting an upgrade here today. And we're watching these rare earth stocks. So Northern Rare Earths reports a first half profit increase there in the prelim numbers. So that's certainly helping the stock be gaining about 6% as well. There's a lot more talk about what happens when it comes to these markets. We thought NVIDIA would actually help the likes of HS Tech. It's not today. We're slightly on offer here when HS Tech here today.
Yeah, I think it's that other sort of bigger trend that's also sort of overwhelming that positive sentiment from NVIDIA. And we're talking here about involution. We're talking about the warnings, particularly for the food delivery market, because you've seen really big offers from JD, Meituan and also Alibaba to try and compete in this space. But government officials through local media are saying there's really no winners in price wars, but that does seem to be sort of driving sentiment. We are seeing, though, broadly equities are sort of lifting off their lows of the day, even though we did have President Trump issuing more tariff news. We've got the deadline now for copper. That's August 1. More ahead. This is Bloomberg.
Welcome back to the China Show. Here's a look at the CSI 300 a half hour into the session. So we're pretty flat right now. We're getting closer, or at least near, those 2025 highs. But certainly we didn't quite meet that milestone yesterday here. Hong Kong, we don't even want to show you what it looks like, the picture there. It's a red rainstorm here in the city. But yes, when you take a look at how MSCI China is doing, it's pretty slow going here this morning, Bell, because despite all what we're seeing when it comes to these tariff headlines, NVIDIA reaching a $4 trillion market cap, I think for now, there's still a lot of wait and see going on. Yeah, and we've had those tariff headlines around copper specifically in the last hour or so, or just over an hour, announcing this 50% tariff on copper effective August 1. And there has been sort of immediate reaction to that, not just in the copper contracts, where you've seen the COMEX one sort of spiking a little bit. We've seen the LME one kind of trading fairly steady, but we have seen US equity futures retreating and the dollar as well, a little bit softer off that. And so that sort of has been one of the major dynamics for the session today, even though we did have a lot of positive news overnight with that continued rally. But be okay, of course, to watch this morning, given that we just had the Bank of Korea coming out, and another central bank that's decided to stamp out this week, BOK, RBA, RBNZ as well. All of those just keeping their key rates steady. But the BOK is saying that they just need more time to understand really what their latest cut means to the housing market. And they're also saying that inflation is largely in line with expectations. What's interesting as well, you can see some of those NVIDIA supplies here moving to the upside. And that was another big dynamic overnight. $4 trillion, the new market cap for NVIDIA. First company to ever reach that sort of milestone here, and certainly what a strong rebound we've seen in the stock, right? You certainly saw it being hammered after the DeepSeek sort of moment, the threat of U.S. tariffs and the like, and we're now talking about this 21% gain in the stock in this year alone, and since 2023, I mean, that chart is just explosive, right? We're talking about a 1,000% increase in the stock. So this AI rally lives on.
Yeah, and that's what we were talking about in the last hour with BNP, just about how even with the trade uncertainty, even with the tensions between the US and China, you still do have that sort of longer-term trend for AI that remains very much intact, and that demand is still there. It is interesting, though, because, again, overnight, some of the key things we're watching were the Fed meeting minutes, and this was This really also just showed us just how much uncertainty there is and how much even officials really can't come to an agreement here just because there's so many unknowns.
They're divided when it comes to what the tariff impact on inflation, right? Is it just a one-off sort of increase? What does it do for inflation expectations? So that growing divide among the Fed is something that is really emerging now among the committee. And certainly maybe what does that mean for Fed expectations, right? I think we've already pushed back the expectation of July to maybe further back this year, as well as many of these central banks, as Bell mentioned, seem to be now waiting and seeing to see what this tariff uncertainty brings. But certainly there's a lot to talk about as well, right? When you're talking about copper tariffs, that's the latest there. Brazil starting to get hammered overnight as well. We saw that big move in the real overnight. It seems like still a lot of headlines, but markets, for the most part, they're saying, I'm just going to forget this right now and fade it.
Yeah, well, again, we've seen sort of it's quite sensitive, though, to what's going on. Let's bring in Christian Nolting, Global CIO at Deutsche Bank, Private Bank. And Christian, as Yvonne was saying there, we've got traders that seem to kind of be looking past tariff headlines to a degree, and we have seen some optimism, but still there's a lot of concern that we see reflected around fiscal expansion, what the central bank is going to do, who's going to get these letters next, where trade agreements are going to go. What's top of mind for you this morning?
Yeah, I think it's not a surprise, to be very honest, that you see tariffs being negotiated, that you see not only trade tariffs. I think President Trump talked about secondary tariffs as well. Now you have other tariffs coming in place. So I think uncertainty is certain on that page. But I think you look at markets, right? So they're always very bad on this. I think markets are very rational, and they decide, okay, who is impacted by tariffs and who could be a winner. So if you see productivity growth, if you see technology coming in, I think that's a very positive development. So you need to always take the decision. It's sometimes negative news, but what's the implications then for markets? And that could be sometimes even a positive one.
There seems to be a lot more of chatter about U.S. markets coming back to life in some way as we hit close to records. What is positioning telling you so far, Christian?
So I think positioning, as I said, right, markets are very rational. Positioning versus technology has really come back after beginning of April, because the markets would say, where do I see still productivity gains, and that's coming from the technology side. If you look at other sectors, I think banks are doing very well, which is reflecting a little bit this higher for longer. So look at 10-year yields. They have not massively changed. They're even a bit higher than beginning of April because of inflation coming in. And we still think there is inflation coming up, especially in the US, especially in this quarter. And then if you look at markets, for example, on cars, automobiles, they're probably hit by tariffs, and their expectations are lower. So the market is really differentiating, and that's why it's important for investment strategy to say, okay, who is impacted negatively and who can be positive because of growth. And I think that's key also in the next month.
Yeah, I think your expectation is for inflation to go above 3% this quarter in the US. So what does that mean in terms of the Fed easing cycle and also for the dollar in turn?
So, yeah, we do think that's the case, especially for Q3, and we do think then it's coming down. Why is that the case? First, we think tariffs are inflationary, but also there's a base effect from last year coming in, something you should not neglect. So looking at this, that can happen, 3% plus in Q3. For the Fed, I think what they are saying, right, they need to wait and see. They see the data as well. They need to wait and see what the impact from tariffs is, what's the base effect impact. And we do not expect a cut this month. We rather go for a cut then probably in September, rather September than October. So we do think the Fed will cut because growth is also not super strong in the US. But first you see that peak in inflation, and then for them it's not so easy to cut in that environment. Later I think it will come.
There's so much volatility in the FX space, given your dollar view. I mean, the euro's on an absolute tear, Christian. We're talking about 117 levels against the dollar. How strong do you think the euro can really rise from here, given that it seems like there is this sort of baseline or base view of 10% tariffs in place from Trump?
Yeah, it might be even a bit higher to the EU, I think, at least for start of negotiations, but there might be some sectors excluded. So you need to eventually look at the effective tariff rate, if you call. We've seen, as you say, euro dollar, right? We've seen quite a move, 102 to even 118. So the massive strengthening of the euro. It was more weakening of the dollar from my point of view. We think that trend could probably continue, but not at the same speed. Because at one point in time, it also starts to hurt the European economy, which is very export-driven. And if you have a dollar declining too fast, that's also importing more inflation to the US. So I think both sides would not be interested to get a substantially weaker currency from here. But I think the trend to slide further downside is still there, because we do see still money flows coming out of this and probably into Europe as well.
But given that amount of volatility, do you need to actually change any of your FX hedges or your hedging strategy then in turn?
No, not necessarily from our point of view. I think that was a bit expected that this is happening, so we don't need to change anything from that perspective. We are very well positioned. We have really looked at sectors, not only at regional aspects. And so from that perspective, I think we need to rethink a little bit the euro view in case the euro would get much stronger from here. That's not our expectation. But if we were to see that, I think that could hurt a bit on the European equity side. And that outperformance we have been seeing, especially in the first quarter, not so much in the second quarter, but as I said, right, a super strong currency would be probably a bit more negative for Europe. And then if that's happening, we would need to change course a little bit on this. Not our base case, but certainly a risk case to that.
Christian, I got to get your take on what's going on long rates, right? The volatility that we're seeing, we've seen ructions in Japan and the U.S. as we start to see investors really demand more compensation in some of these more riskier assets here right now. Do you think this is sort of the new norm that we're seeing on the yield curve right now?
Yeah, I think for quite some time we've seen sometimes higher volatility on the bond side than on the equity side, which is not quite usual. I think that could stay because there's, at this point in time, quite some uncertainty what's happening with the central banks. Well, you just showed the chart. Even the Fed is a bit divided on the inflation view. So if you have clear views from the central banks that should bring down volatility also on the bond side, it's not the case at this point in time. So I would expect volatility, especially on the bond side, to stay higher until really we know about the inflation picture. We have a clear view on this one. But I would say that's why I don't expect too many cuts, some from the Fed, maybe even less from the ECB if you talk euro-dollar, because the stronger currency is bringing down inflation as well. But as you said rightly, I think volatility would stay quite high on the bond side. I think volatility on the equity side has really come down. It's probably a bit too complacent for markets. I would expect this quarter also some more volatility on the equity side. But that's also then bound to earnings, of course, which are kicking in from next week onwards.
Just on the bond side, though, because we do have that really important or pivotal Japanese 20-year debt auction coming up later today. If we do see that demand come in weak, what does it also tell you about the implications for other tenors? And I'm thinking specifically about the 10-year one.
Yeah, so there's a lot of focus on markets now on all these auctions. Japan, of course, is one. UK is one. And of course, you always look very closely also now to what's happening with US Treasuries, especially, as you rightly say, right, the longer maturities, 10-year onwards, 30 years. So the market is clearly focusing this. Is there enough demand? I think we had some auctions which were a bit weak, but some auctions a bit stronger. So that's why you watch it. And that's, I think, is, as you rightly say, a source for volatility. So if you see weaker auctions, that could mean volatility is going higher and probably yields then, of course, going a bit higher from that perspective. And I think that's a bit our view, right? We do think higher for longer, and that's why, for example, for 10-year treasuries, we would expect them to be in 1 year's time at 450. Not massively, but slightly higher from where we are right now. That's one driver of this from our point of view.
Christian, as we kick off the second half, what do you think is going to be the biggest risk overall? I mean, what could actually go wrong for the next few weeks and months?
Well, treasury auctions, bond auctions, if there's some weak demand, that could cause some bond volatility, as we said. I think on earnings, I'm rather not so concerned because the market is very rational. Earnings expectations are not very high. But of course, if some companies would miss that, that could cause some volatility. I think that's something to take into account. Otherwise, the debt sustainability is always a topic which is important to us. There's a lot of fiscal spending going on. And if the market says that's probably too much, that could cause volatility. We've just seen that in the UK. So that's some risk factors we really take into account on the especially Q3.
Christian, it's great to have you on. Christian Nolting there, Global CIO at Deutsche Bank Private Bank. We got plenty more ahead. This is Bloomberg.
We never had anybody in the White House that understood the numbers or were into it like I have. You know, we've taken in hundreds of billions of dollars in tariffs, hundreds of billions, and we haven't even started yet. And it's going to be a great thing for our country. I think it's going to be a fair thing for the world. And we really haven't had too many complaints.
President Trump there on his latest thoughts about his tariff strategy as we kind of count down and look at what's the latest, right? First, it was slapping 50% levy on copper imports. That's set to go into effect in August 1st. We also have Brazil to deal with as well, Philippines overnight. Let's bring in Jill Desus with an up-to-date sort of pulse check on what's really going on so far.
Yeah, I think at this point, Yvonne, what you've just highlighted are really the latest in this slew of tariff announcements, although Trump has said that I think he's planning to announce, he said, at least 7 more tomorrow. So that's Wednesday or Thursday, U.S. It keeps going. But the latest when it comes to copper, so we've got this 50% tariff on copper that Trump's announced. August 1st is when this is supposed to go into effect. Again, just so many unanswered questions about what exactly this means. We do know that, Trump has been telegraphing for several months now that copper was going to be a target. He's really keen on sort of boosting domestic copper trade. The U.S., though, is, of course, highly reliant on imports. What we don't know, though, is exactly which types of copper are going to be covered under this specific tariff plan. We don't know if there's going to be exemptions for anything. We don't know if there's going to be exemptions for copper that's currently on the water being shipped to the United States. A lot of shipments have kind of tried to speed up, shipments to the United States. We know that traders are trying to get things into Hawaii, into Puerto Rico to try to avoid this August 1st deadline. But again, I mean, what we've seen in the past when, tariffs have gone into effect on steel and aluminum is we've actually seen, the United States apply some exemptions for stuff that was already in transit. Don't know if that's the case here, but at least when it comes to that commodity, obviously, again, still some unanswered questions there. And then, yes, I mean, Brazil, first of all, really the first nation that we've seen brought up here where it's actually has a trading deficit with the United States rather than surpluses, which was, initially the target that Trump was, going after when he announced all of his Liberation Day tariffs earlier this year. But that, again, does seem to be at least somewhat politically motivated. He cited this trial against the former Brazilian leader Bolsonaro is kind of an impetus here. But yeah, I think it just really goes to show you there's a lot still kind of playing around here, and I'm sure a lot more to come.
And we're seeing those impacts as well that the countries are really referencing. I mean, we can take, for instance, go to Seoul right now and take a look at the BOK briefing that's just started because we had the decision earlier today and officials electing ultimately to keep the key rate on hold. But importantly, the governor here is saying that I mean, yes, the decision was unanimous, but that global tariff talks are going to be having an impact on growth. So what do we know about sort of the broader impact from this, but also how the negotiations are progressing in the background?
Well, I think at this point, Belle, I mean, a lot of these countries are saying they still want to continue negotiating with the United States. And I mean, to their credit, Trump just a couple of days ago when, that August 1 deadline was announced for these tariffs actually going into effect, he did indicate at the time that, maybe that deadline was firm, but not 100% firm. There was still room to negotiate. And I think, a lot of countries have sort of taken that to mean that even if you get one of these letters, there's still at least a few weeks to try to, figure out something. Maybe there's an additional delay in place. Obviously, Trump has kind of gone back and forth on that a bit and has changed his tune just over the past 48 hours or so. But we are seeing that, with the Philippines, for example, so they were slapped with a 20% tariff in one of these letters. They've actually said they're planning on holding further negotiations now. So when it comes to some of these places, I mean, South Korea, you can, make the same argument. Japan, which received a letter earlier this week. So at least when it comes to, some of these deadlines, there's a lot of uncertainty over whether or not, if you've got a pretty good relationship going with the United States, if you've got got some indication that maybe there's some headway to be made there. I don't really think that we're seeing a lot of nations, just say, okay, like we'll just sit back and accept, whatever is written in these letters. It does still seem like there's at least, some reason to believe that maybe there's additional room to continue negotiating. I'd also point out that even in the cases of countries where they've reached agreements, like the UK earlier this summer, I mean, there's still a lot of open questions about, various other aspects of that trade agreement, steel, for example. I mean, so there's, again, like, just because you've got a letter in front of you, if you're one of these countries, it does seem like there's still some room for talks.
All right, that was our Bloomberg editor, Jill Deeses there, keeping across all these fast-moving trade headlines this morning for us. But just going back to that BOK presser underway in Seoul right now, because we're getting more headlines or lines crossing from Governor Rhee talking about this decision to hold the key rate steady, rather. So he's saying that decision was unanimous. He does say that there is a need to maintain an easing policy, so still dovish in his commentary there. But he is also saying that essentially financial imbalances have increased greatly, and also global tariffs are going to be having an impact on growth. So we've seen that really across the course of this week, just how many central bankers are grappling with President Trump's decisions.
Yeah, and the consensus seems to be this is still just a pause in this easing cycle, right? They've already cut twice already this year. It seems like there's still expectation they may be able to cut next month in August, according to some economists that we've spoken to as well. But yes, this was a unanimous decision, at least for now. It's not just the external threats, but they also talk about financial stability. The like we're seeing in the housing sector was a key sort of risk that they were looking at as well, and why they decided to hold off for now. But the Kospi seems to be liking that news, right? We're continuing to see session highs there for that benchmark. We're up some 1%. Plenty more ahead. This is Bloomberg.
Taking you back to this BOK presser this morning in Seoul, and we're getting more lines from Governor Rhee. He's saying that, yes, they decided to hold rates steady today, but 4 of 6 members are open to a cut in the next 3 months. So there's still that easing policy in place. This is just ostensibly a pause for now. It is still, though, that big question of how to manage or guide around inflation expectations. And on that note, actually, that the head of the White House Economic Advisory Council says there's no evidence that President Trump's tariffs are inflationary. And Stephen Moran told us that the uncertainty surrounding tariffs will give the U.S. leverage to make better trade deals.
I do see the uncertainty starting to reduce in the near term. Part of the benefit of uncertainty is it gives us leverage in negotiations, right? Like, the president knows how to extract concessions from our trading partners, and he has been very successfully doing so. Now, as what you've seen with a number of these letters is there's some countries that haven't made the concessions that the United States requires, and as a result of the decades of accumulated trade deficits, the president has decided that tariff rates should ratchet back up for those countries on effective August 1st, and I expect that to happen.
I want to talk more about the sectoral tariffs, the Section 232. You look at copper just over the last 24 hours and the price increase you've seen in copper alone. This is a critical input for data centers, for power grids, for industrial machinery. And as the administration looks to bring more manufacturing onshore, how isn't it the case that a 50% tariff would impact some of those other efforts to otherwise power the economy?
So you have to differentiate between changes in relative prices and changes in the general price level. And when you target a specific good with a tariff like copper or some other specific good, you're going to get relative price changes, and that's totally expected. But that doesn't mean that there's an increase in the general price level, by which we mean inflation, because there are lots of thousands of products and services that go into the general price level, and it's an average, a weighted average across all of those. And we just published research yesterday showing that there has been no tariff-induced inflation in a general price level since the tariffs began being implemented in January. Quite to the contrary of all of the Cassandras that were shouting that it was going to be extremely inflationary. There's just no evidence of that thus far, just
Stephen,
like in 2018, 2019. Yeah.
Listen, I read the research, and we'll get back to it, but on copper, I want to read this note from Jefferies. They say that the U.S. does not have nearly enough mine smelter refinery capacity to be self-sufficient in copper. So then why target it?
Well, we need more of it. We need more of it produced domestically. You know, there are certain critical minerals, of which copper is one, that you just absolutely need if you're going to have a manufacturing sector. And having a manufacturing sector is important, not just economically, because it tends to be a high capital, high productivity field with good paying jobs, but also for national security. You cannot defend yourselves if you do not have a robust manufacturing sector, and critical minerals like copper are essential to that. So will we be able to corner a market in copper? Absolutely not. But can we make more than we currently do? Yes.
That was the U.S. Council of Economic Advisors Chairman Steve Moran speaking with Bloomberg's Sonali Barsik. And we are just getting some lines crossing now from Elon Musk on X. And he's talking about this Grok model and the inappropriate posts, essentially, that came out overnight. So this has really caused a furor and certainly is something that a lot of people are tracking really closely. But he is saying that they will be needing to improve their image training here. And the question or the concern is that essentially this chatbot shared multiple anti-Semitic comments.
Yeah, that was on the backdrop of what we just heard overnight with the ex-CEO, Linda Yaccarino, stepping down. Reports say that it wasn't because of what happened in Grok, but certainly what she's dealt to deal with the last 2 years when it comes to trying to keep advertisers on the platform, also managing Musk as well. Some were saying this was probably pretty inevitable, her departure as well.
Yeah, actually, I think I read one comment that said, she lasted at least 2 years, and that was longer than many people could have actually expected. But still on that tech front, we've got a really big interview coming up in a few minutes. Geek Plus talking about their expansion plans after their trading debut in Hong Kong just yesterday. More ahead.
11:29 a.m. in Tokyo. Japanese markets are heading to that lunch break here right now. And seeing a bit of pressure when it comes to equities here this morning. Perhaps that stronger yen has something to do with it as well. We're approaching 146 levels as well. But also there's a bit of angst in the long end of the JGB curve, right? That 20-year bond auction is happening later on today. We'll see how the demand picture looks in the next hour as well. But given just what we've been seeing, the volatility and the sell-off in the long end of the curve globally, not just in Japan, but also in the U.S., we'll see if there's any sort of demand that does get impacted so far, just given all these fiscal concerns around the world.
Yeah, and if it is weak at the longer end, what does that also mean for the benchmark 10-year rate as well? And will we see any sort of second-order implications there? But let's also take a look broadly in the market session today, because it's been a pretty interesting session. We came into the open this morning and we were riding off the coattails, essentially, of the U.S. overnight. Lots of optimism around NVIDIA, for instance, hitting $4 trillion for the first time ever. Today in the session, though, again, we had those tariff headlines. President Trump specifically nominating the date now for these copper tariffs to take effect. That's August 1. And we've seen a bit of a retreat in the dollar. We've seen a bit of a retreat in U.S. futures in turn. We are seeing Asian equities, though, moving here to the upside a little bit, keeping a big watch on the tech sector in particular, given, as I said, around NVIDIA, but also some big listings yesterday in the session.
Yeah, the record amount of listings we saw in one day, right? Those 6 gongs on stage really goes to show that Hong Kong in some ways has regained that mojo in the IPO front as well. Geek Plus was one of those 6 on stage here, and that stock is up another 5% here today. So in total, we're seeing 10% gains on Geek Plus. If you don't know who they are one of those warehouse robotic companies as well. And certainly a lot of questions that we have to ask here to the Vice President of International Business of Geek Plus, Lit Fung, joining us here. Lit, thank you so much for joining us. What a time to be debuting your stock publicly at a time when Hong Kong seems to be coming back in a big way. Yeah. Tell us a bit more about the timing of this listing for you. Why now? And what are you going to do with the proceeds?
I think this is like a quite good timing, let's say in Hong Kong, this is also our plan, from more than a few years, and catching the financial economics benefit in Hong Kong, as well as we are the Chinese company, Hong Kong is like the best place to list it here and to facing the international market, as well as Hong Kong is the first our international office established in Hong Kong since 2017.
You're already used by a lot of different major companies worldwide, and that includes in the US, in Europe as well. What are you planning to do, though, with these proceeds, and what's next for the business?
I think probably, yeah, of course, we should penetrate in the market and also replicate of our existing customer, to bringing them to have a more valuable solution for them, especially most of the country or most of the customer facing the scarcity of the labor, shortage of the labor, right? How we can enhance their warehouse operation by the high demanding of the supply chain and also the order fulfillment.
Where do you see the most, I guess, place where you have the most potential in the markets that you operate here right now? And does the tariff threat in any way in those nations impact how you do business?
I think tariff is bringing us an opportunity. It's a good challenge for us. Well, I think we already having some warehouse across the globe. We have different warehouse, we have the inventory. I think we can suffer on that for the local customer. And for the midterm or long term, of course, we are also having some manufacturing deployment, in other region. Since 4 or 5 years ago, we are already having automated warehouse manufacturing hub, in China. That where we are ready to replicate in anywhere, easily, in other country. Yeah.
You mentioned about how you can see tariffs as a good opportunity, but what does it actually mean for your bottom line? And do you need to increase the cost of your products for your consumers?
No, we didn't have any ideas on the pricing yet. Because the tariff is still high up. So I would say we still suffering all of the inventory locally. We are already deploying a lot of warehouse in U.S., in Europe, in other regions. So we still have an inventory to solve this for the short term. For mid and long term, of course, we are easily to deploy any manufacturing hub in anywhere, to minimize the problem of the tariff.
Humanoids are a really big topic right now, and this is a very competitive space in China as well. But is that a business line that you'd be looking to explore?
Yes, of course. We are a robotic company, AI-driven company. So AI, robotic, humanoid is the hot topics right now. Humanoid is one of our consideration roadmap for our innovation team.
Is it early stages right now? Is there developments being made around humanoids?
I think it's early stage, still in the early stage, right? So we are considering, we are thinking about how we can utilize the humanoid together with our existing portfolio.
And what are the challenges for you when it comes to humanoids? Is it on the hardware? Is it on the software side? What would be the biggest obstacle to overcome, do you think?
I think not the obstacle. I think we should well study for the market, as well as the application is much more important rather than the hardware and software.
Yeah, well, that's, I guess, the thing, because the companies that I speak to in the humanoid space in China, they sort of all have a shared goal. Yes, there's the factory side, but also you want to get to that point that you're moving into households.
Yes.
Factories seem to be first, though. Is that right?
I think, warehousing. Warehousing should be our higher priority.
Mm-hmm. What about on the AI side and more on the software side? How are you going about improving your models there, and what are the sort of signposts or goals for you over the coming years?
Yeah, AI. I think this is one of the weapon for the customer. How we can optimize their warehouse. We are talking about more than hundreds or almost 1,000 robots running in the same place, right? How we can optimize, how we can utilize those robots running at the same warehouse by different demanding, different order profile. That I think AI is one of the I would say algorithm. AI algorithm is helping for the customer to optimize their warehouse by their demanding.
What sectors do you think are seeing the most growth potential here right now? Obviously, you focus on the e-commerce space. I'm just wondering, what other sectors are actually seeing this need for warehouse robots?
I think there's many industry, no matter retail, grocery, e-commerce, they're getting more high demanding or high expectation from the consumer, response time, delivering time, So I think most of the industry they're they will choose the automation for the robotic to help in their warehouse.
Which area then, or which country, which market represents the biggest growth opportunity?
Yeah, I think, of course, for first-tier country, no matter in America, Europe, and Asia, we already cover more than 40 countries right now. So, and together we are looking at South America is like a high-growth region that we are seeing, Middle East as well, Yeah.
All right, well, Lit, thank you very much for joining us this morning. Congratulations on the debut yesterday as well. That was Lit Fung there, Vice President of International Business at Geek Plus. And subscribers can watch us live and see our past interviews on our interactive function. That's TV Go. You can also dive into any of the securities or Bloomberg functions we talk about. Plus, become part of the conversation by sending us instant messages during the programming as well. So check it out at TV Go. We'll have plenty more ahead. This is Bloomberg.
Well, Malaysia's Prime Minister Anwar Ibrahim will make an appeal for lower tariffs when he meets U.S. Secretary of State Marco Rubio today at the ASEAN meeting. Let's bring in our Min Min Lo. She joins us now from KL. Min Min, what's going on?
Yes, we actually just saw the Chinese Foreign Minister Wang Yi coming out of the meeting room. He just completed the session with the ASEAN foreign ministers. He walked past the media pool and didn't take any questions from the media. I did manage to follow him for a short distance and to ask directly if he is going to meet with Marco Rubio today, but he smiled at us and remained very tight-lipped, so no answers from him. But as he was coming out, he did grab hold of the hand of the Malaysian foreign minister for quite a while, actually, and it is, I guess, a very symbolic gesture in front of the media to show this close ties between ASEAN countries and China. They're continuing to deepen cooperation even amid this global climate of rising protectionism. Of course, Marco Rubio is here as well. He will be meeting with ASEAN foreign ministers later this afternoon. He's also going to be meeting the Russian foreign minister Sergei Lavrov. That's a meeting that we are closely watching because it comes as Russia has been pounding Ukrainian cities with a record amount of drones and missiles. President Trump has expressed his displeasure. He said he is going to be looking closely at this new bill that is introduced by the Senate to sanction Russia and countries that buy LNG, oil, petroleum products from Russia. So, of course, China is a big buyer. What are the implications then for China-U.S. relations? Very important as well. Will Marco Rubio be sitting down with Wang Yi? Wang Yi didn't say no. So it is possible we still have a couple of days to go here. Possible that maybe that meeting could happen at the last minute. We're certainly keeping an eye on that.
That was our China correspondent, Min Min Lo there, and some of the other stories that we're tracking this morning. Well, in the tech space, Nvidia's valuation briefly topped $4 trillion in the New York session, making it the first company in history to hit that milestone. The stock's risen more than 20% this year and more than 1,000% since the beginning of 2023. The latest catalyst has been a commitment to AI spending from its biggest customers as demand for its computing systems remains strong. You can see in that chart there the rally that we've seen. But in the tech space as well, Meta is making unusually high compensation offers to new members of its so-called superintelligence team. We're told that includes a $200 million package for former Apple engineer Roaming Fung. Sources say much of that money is tied up in performance targets to be unlocked over years, and we're told Apple didn't try to match Meta's offer, which far exceeds pay for anyone there except CEO Tim Cook. And staying on tech, of course, and Elon Musk's XAI chatbot Grok 4. I mean, it's set to launch in the next hour, so this latest iteration, but it's certainly launching at a moment when it's also facing a lot of challenges with the existing Grok platform in place as well. The furor this week has really been around some anti-Semitic posts that were shared early this week, and now we're seeing the backlash from that in places as far away as Poland, in Germany as well, and Musk commenting on that on social media.
Yeah, so they're trying to complete this improved image training for Grok 4. They certainly have a lot of PR to do and damage control the next coming days or months, and just given what we've been seeing, right, this backlash that Bell you've been talking about. And ultimately, was that the nail in the coffin for the ex-CEO Linda Yaccarino to leave X after 2 years of the job? I mean, she's had to do a lot whether it's trying to bring back advertisers back into the platform. Also, when it comes to rebranding Twitter to X, I mean, certainly that was some reports saying she actually was caught off guard by that as well. And of course, this whole X merger with XAI back in March as well. Some people said, the writing was on the wall really for her to leave, but certainly it's a whole wall of worry really when it came to her responsibilities of managing Musk and also the day-to-day stuff.
Yes, certainly she faced a lot of challenges there during her time as CEO. But shifting now to also the investment strategy of Singapore's state investment fund, Temasek, saying exposure to China has fallen to less than 20% of its portfolio as it boosts allocations to the Americas and also to India. But its CIO told us about China's AI ambitions and how those could end up being the game changer.
In terms of AI adoption, China is going to be pretty advanced on that, adopting AI for productivity or other things. That's because we have so many engineers and AI tech people out there that the diffusion into companies to adopt AI, I think, is going to be quite fast. So you take an example, a company like Tencent. We invested out there. It is clearly benefiting from AI in terms of how it uses it for its own business. So I do think you will see in China too, particularly on the adopters side, significant opportunities for us to invest.
How long-term a view would you have to take on that, though? Because it's interesting, we've seen these AI developments, yet they're not really driving tech earnings upgrades. That seems to be quite modest still.
So at the near term, it's obviously having an impact on productivity for those who who are equipped to use it. So the most obvious example of that is, let's say, the Magnificent Six, companies like Microsoft or Google or Amazon. And they all talk about the fact that they need far few coders, for example. And actually, one of the ways that their earnings are being upgraded is because how they manage their costs as AI improves productivity. So we already are seeing it in one group of companies who are best equipped to use it. As that gets diffused across more and more companies who have the ability to use it, I think you will see that spread out. Now, it may take time, but I think on some companies, you're already seeing that today.
How are you managing the China real estate exposure as well?
So look, that has been a challenge over the last few years. I don't think we're out of the woods out there, but the pace of decline has, I would say, stabilized to some extent. The government's very conscious about stabilizing the real estate market, and they're taking efforts towards that. They clearly don't want a bubble to be recreated, so I don't think we can expect a sharp rebound. But it is something that our portfolio companies, because I think our China real estate exposure is primarily through our TPCs like Capital Land and Mapletree. And they're looking to see how to manage through this environment, including making investments elsewhere too.
Would you say that previously it was a bit more cautious in the past year, at least when you're looking at China investing, and that now there's a change, a more positive outlook for Temasek?
So I would say China's always been a very important market for us and one of our biggest markets. And we think as an $18 trillion economy, there will always be significant opportunities for us. So our focus out there, and compared to most other asset owners, our exposure there is very, very significant. What has happened in the last year? I mean, I would say a couple of things. Confidence has improved, particularly amongst entrepreneurs. DeepSeek was one moment which actually led everyone to believe that despite these trade tensions, China can compete with the best. There's also belief amongst private companies that the government is supportive of them. And so you are seeing that improved confidence out there. The government's also made it clear that, yes, they're not going to create a bubble in the economy, so you're not going to see a major turbocharging the economy, but they will provide stimulus wherever they feel that growth is slowing down to levels that are not acceptable to them. So the downside risks that we were concerned about last year, the government has actually put a floor to that by saying, look, we will provide support to make sure that the economy continues to grow at a certain level. And you've seen first half of this year, our estimates are it'll grow over 5%. So in that sense, it's changed. But I think our view on China, even last year and this year, was that there will always be high-quality companies, particularly focused on the China domestic market, for us to invest in, and we continue to do that.
And that was the Temasek CIO there speaking with our colleague Avril Hong. I just want to get an update when it comes to the weather here. Yeah, it's looking bad, but not as bad. right now. So they're still seeing the dark clouds loom, but we've downgraded from a red to now amber rainstorm in just the last couple of minutes as well. Plenty more ahead. This is Bloomberg. The Warburg Pincus CEO says private equity firms will continue to face headwinds from a structurally higher rate environment. Jeffrey Perlman told us exclusively that long-term borrowing costs are likely to continue leaning towards multi-decade highs.
The industry, has benefited, and the world probably has benefited from, rates coming down over the last 40 years. Look, this is the first time in 40 years you're seeing a structural step up in rates. I think, as I said today, for a number of factors, I think you'd probably lean towards a 10-year that's probably more in a 4 to 6% range than a 2 to 4% range. And by the way, that's an environment on a long-term basis, that's not, crazy high. As investors, we can make money in that type of an environment. But I think what it will do is the folks who overextended themselves, especially in the 21 vintage, with very, very high valuations, that is going to be very, very tough. And so what I do think will happen, reputations will be reset as a result of, I think, folks who probably did too much in 2021.
When we talk about PEs, it's always about exits. And we know that a lot of companies find it challenging, especially in this kind of environment. How are you looking at it? Where are the opportunities? And, what's so challenging about the current environment?
Yeah, no, look, I think, the thing that's been a little frustrating from an industry perspective, at least from my perspective, is this has been a pretty positive equity market backdrop, right? So there should have been kind of more exits during this period of time. I could understand it more after the GFC or after the tech, bubble burst. You had 2 years of kind of poor equity markets, and therefore it was challenging time for exits. This has been a pretty good last couple of years for the public equity markets, even if you take away the performance of the Magnificent Seven. And so for us, we've been very active on the exit front. We've distributed 50% more money, I think you guys have reported, than we've invested over that period of time. And so, but the difference is the reason we've been able to do it is being diversified, because you can always find pockets in the portfolio that's not correlated. One year it may be that you can sell more in Asia, the other year you can sell more in Europe. Some years you can sell more healthcare, other years you can sell more technology like we did last year. To me, that's what the industry had gone away from. Too many folks went away from diversification and were too focused on single sector, single country, single stage of investment. And I think that's where they've gotten themselves in a little bit of trouble.
But how does diversification look like, a good diversification portfolio look like? Because if you take a look at the PE market, yes, India looks healthy, but a lot of people are stuck in China, for instance. So how does it all play? How should it look?
Yeah, look, with the diversified portfolio, not everything is going to work at the same time. That's the definition of being diversified. But the key is that you don't overextend yourself. We think about it as the beta can get you in the top quartile in private equity, but it can also get you into the bottom quartile. And that's if you're too focused in one sector, one geography. And that overexposure can both help you, but can also hurt you substantially. That's why, in our view, this diversification by design that we've used at Warburg has been very valuable. But that's diversification by number of investments, by vintage, making sure you invest about the same amount year in, year out, and then by sector and geography. That, to me, is proper diversification.
And does the Middle East factor into that? Because we know you made inroads into the Gulf nations, and that seems to be the hotspot right now. Yeah, look, obviously there's tremendous capital there, but there's also opportunity. And so, like anything, we were early, as I said, in Asia 30 years ago. We were in Asia. We went to Europe, 40, 45 years ago. And so we look at the Middle East and we see opportunity. We've made investments there in the past. Companies like Network International were very successful investments. And when I look at kind of near-term opportunities, there's a clear need for digital infrastructure, for logistics. These are areas that we've been big investors in around the world, and I think could be, again, very interesting, attractive opportunities as we look out over the next few years.
That was the Warburg Pincus CEO Jeffrey Perlman speaking to Bloomberg's Haslinder Amin there. And we are going through the market session today, and there's certainly a lot of things to be watching out for. But chief among those is going to be what happens with this JGB auction coming up later today. It's an auction for the 20-year, and certainly the results are going to be watched very closely here because we want to see, is there weak demand? Is there still those concerns? And are we still going to see the longer end really driving the bond market dynamics? But also taking a look at what's happening in the crypto space today, because Bitcoin, I mean, we briefly touched $112,000. We've never seen that.
Yeah, and look at Huobi Tech. We're up some 13% here in Hong Kong. So certainly there's a lot of opportunities and people looking at maybe, yes, we're going to lean towards risk here despite all these tariff headlines and what we're seeing from President Trump. That's it for us here in the China Show. Insight with Haslinder Amin is next.